You think I wanted to become this? You think I woke up one day and chose to carry all this weight? I wanted a normal life, to laugh without guilt, to breathe without feeling like the world was closing in. But that wasn't an option. Not for me. Not for any of us. From the moment I opened my eyes, everything was a fight. Every dream I had, crushed under someone else's boot. They told us to wait, to hope, to trust the world would change on its own. But it didn't. So I changed. I did what had to be done, even when it broke me, even when it made people I love look at me like a stranger. I never wanted to.
Alright, but it is currently Monday, the 2nd of March, and in relation to the economic calendar, today we had high impact news at 10, being ISM manufacturing. So, took 3 executions today, and we're just going to take a look at them. I'm going to try and go through this rather quickly. So took 1 during New York AM, 1 during the New York lunch, and then the last one during New York PM, so just ahead of the power hour. The one during the New York lunch, however, I did actually end up manually closing this trade before I ended up hitting stop loss because I did not like the way price action was maneuvering, and I will get into that. Executions were all on the MNQ today. Did not trade on the NQ, so there's no annotations on this chart. All of the annotations are on the NQ chart. Today I just decided to execute on MNQ simply just trader discretion, which I will just touch on just a little bit as well. But I'm gonna get a little grasp of what the higher time frame is doing overall and what the idea was going into the day. So when we look at the daily time frame, you can see that from the previous week's trading, we had this deliverance up towards the buy side, engagement with this weekly high, and a cracking correlation just above it. Now, this was a very, very nice move. Reason why being is because not only do we have this cracking correlation, but where this cracking correlation is occurring is very significant. It's above the yearly open. The yearly open is still relevant. It's always relevant across the entire year, but during the first quarter, the yearly open is very, very relevant, and seeing a algorithmic signature presenting itself above the yearly open is rather green in a sense. And over the course of time, I've simply been looking for sell side delivery to occur on the NASDAQ. So it's just the alignment of the idea I had in mind. So we go back, we see that cracking correlation that occurred on Wednesday. Thursday, we have that deliverance down towards sell side. And then Friday, it was a pretty poor day. To be honest, I actually don't remember most of last week because I didn't trade most of last week. I only traded one day, which was this point of inception right here for the high of the week. And yeah, so taking a look at the 4-hour, charts are a little bit cleaner. Reason why being is because it's a new month. Every time I roll into a new month, simply just clear out the charts, leave what I deem is important or necessary to me in terms of the way I'm looking to gauge price action, and remove whatever is just not important. So we had the 1800 opening right here, so first of the month, and we have deliverance down towards sell side, and a cracking correlation presents itself with ES, and this is what ignites the buy side delivery over the course of today's price action. Now, like I mentioned previously before, I've simply been looking for sell side delivery. And what I really wanted to see, I no longer actually have this on the chart, but if I do bring it from this high all the way down to this low, you have your equilibrium, and you can also use this high here, except the only thing is that this cracking correlation is presented with YM, and that's a discussion for a completely different topic. But you have your equilibrium right here, and then when you look above your equilibrium, everything above it is in a premium, of course, and you have this one SIBI right here. Now, I did not think that we were going to engage with this SIBI today, to be quite honest, but we have. And it's an institutional order flow entry drill. So we can see we barely even engage with it. It's really just a tick above it, engaging with that, the equal highs that were residing right there, which are a lot more prominent and obvious when we go into the lower time frames. But we have that engagement with that SIBI, which is in a premium of the range from this high all the way down to this low. And in regards to this range, standard deviation projected out in price, you have your -2, -2.5, where we reaccumulate orders. Now, we don't reaccumulate orders. Orders are not reaccumulated here. We don't have a cracking correlation at these highs right here in order to permit for these highs to be equal highs. Equal highs can get left in price as long as they are permitted to be left in price. But in this case, they're not permitted to be left in price. There's no cracking correlation signifying that these highs are protected. So we engage with the -2, -2.5 being right here. Failure to reaccumulate orders, but we continue down towards sell side to engage with the -4, -4.5, which is where we find terminus. And this is where the monthly candle ended up opening. And then we have that deliverance up towards buy side, the wicks simply just doing the damage. Paying attention to the bodies aren't coloring outside the lines of the standard deviation. Something that I've always been under the impression of is that standard deviations speak the language of the algorithm. Standard deviations are algorithmic. They align with the algorithm's premise, the underlying premise behind it. When we are engaging with price action, it's important to pay attention to the bodies because the bodies tell the story, the wicks are doing the damage. For instance, if we're to look at this segment of price action right here, we have this inversion of this SIBI, but we have the wicks coloring way outside of the lines, and these wicks may be enough to induce parties of the market one side, being sell side in this case. So we have sell side delivering all the way down here, and this may be enough to induce participants of the markets to look to, actively take shorts within the market. Except if we are to look at the bodies are being very respective. If I am to project out the consequent encroachment of this SIBI, we can see the bodies are not displacing under it. We have no closure under it, and that is very good in reference to what you like to see. Yeah, so we have the institutional order flow entry drill with this SIBI right here, and this is where I took the entry. There is no basis for the other two entries I took, so the first two entries I took, there's no basis to them within this segment of price action on the hour 4. So if we drop down to the hour 1, completely naked chart, like I mentioned earlier, it's new month, wiping the slate clean. And yeah, going into the day, we have the 1800 opening right here. We have that deliverance up towards buy side, then deliverance down towards sell side, cracking correlation with ES, and then we have a return back up into buy side. Now, I actually didn't check this, but I can check it now. Yeah, so in relation to this range, so from this high all the way down to this low, this SIBI was in a premium and this BISI was in a discount. And this is the reason why I have both of them annotated, because price action is stuck in this position ahead of the 930 opening because we have the 930 candle being right here, and ahead of the 930 opening, price action was still within this range. And it's, what's the word? It's I can't think of the word. It's not problematic. There's no definitive course of action in order for you to look to say, okay, I'm willing to engage with price right now, because you have more than enough reasoning to say, I'm going to seek sell side delivery, because we engaged with this SIBI right here, which is above not only the monthly opening, but also this range right here. And then you have more than enough reasoning to say I'm going to look for buy side delivery because we engaged with this BISI right here, which is under the monthly opening as well as in a discount of this range right here. Now, of course, aligning yourself with buy side delivery because we have this cracking correlation right here is more than sufficient enough with the logic of, okay, we have these equal highs right here. We also have this NWOG. We also have this NWOG NDOG that hasn't been filled completely during the overnight session, so can look to deliver up towards the buy side. But when we go into the lower fractals, we'll end up seeing that the structure was not the cleanest. I'm pretty sure, if I do remember, 930 just pumped right off the jump. We didn't even return to the first presentation, and the action of price not returning back to the first presentation after the 9:30 opening is an indication that price is in a rush to get somewhere. It needs to get somewhere. So yeah, that's that for the hour one. And then we take a look at the 15-minute. So when we take a look at the 15-minute, we have the 1800 opening right here. We had the Friday's price action, and with Friday's price action very late, and the reason why, sidetracking completely, the reason why last week did not have a lot of trading opportunities for me, except for right here, and even here wasn't even the best. Reason why being is because price was just doing the things I wanted to see it do at times that were not the best. So in terms of this point of inception, this occurred way after hours, 16:30. This is after your, if the reference points in terms of time, this is after your regular trading hours in terms of time. So everything was happening very late. And then this move right here as well happened very late in terms of 15:45. This is during your power hour, but price decided to just fizzle out before the week ended up closing, and then we end up having this new week opening gap down towards sell side. So with this Kraken correlation right here, the move continuing on from the Sunday opening, and we have the standard deviation from this high all the way down to this low, projecting a -2, -2.5, -4, -4.5. As we know, -2, -2.5 is where we see a reaccumulation of orders to then redistribute down towards sell side, or a smart money reversal if permitted. And then the -4, -4.5 signifies for a point of terminus, being the end of that market maker model for the new market maker model to pursue, in this case being the market maker buy model after the market maker sell model ended. So we have the -2, -2.5. This is where our weekly opening is. So weekly opening is here. We reaccumulate orders within the new week opening gap. So very large new week opening gap right here. And then we have that deliverance all the way down towards sell side during the overnight session. So during Asia session, you have that deliverance down towards sell side, and you have the engagement. So London is what engaged with the point of terminus for us to then continue distributing up towards the buy side. Now, a problem I actually had with today was there was no standard deviation here that I was happy to standard deviate to project all the way up towards buy side, because this is your point of inception. It's inception, terminus, inception, terminus, inception, terminus. That's essentially how it goes. And at inception, there will be a standard deviation to project how far the market maker model is going to go down or up in price. And we're looking for a point of terminus for a new point of inception to occur. The only problem I had here is that there was no, like I just mentioned, sufficient standard deviation that I seen in my head for me to project all the way up to buy side. So standard deviations, you'd normally look to anchor them swing low to swing high, or swing high to swing low, and generally it will always be from right to left. You're anchoring it from right to left. Rare cases, which did occur today, you anchor the standard deviation from left to right, which is annotated on a chart where executions are taken on. But looking at this, if we zoom in just a little bit closer, there is no swing high within this segment of price action right here. You have a swing low, but you don't have a swing high. This isn't a swing high, not a swing high. It's a devil's mark. And this isn't a swing high. It would have been ideal if this was a swing high, but it's not a swing high. So no sufficient standard deviation for me to project up towards buy side to look for a point of reaccumulation or terminus. So the only thing I can do is simply just observe what price action is doing. And if you take a notice to what occurs from this point of terminus to transition into a market maker buy model, price ends up slipping into a consolidation ahead of our 9:30 opening, which occurs just right here. And this consolidation is where we ended up seeing this price action right here. So you have that SIBI in a premium, BISI and BISI in a discount. And this is where we end up seeing that consolidation, which is why I was saying it's not necessarily problematic, but it's not the easiest to determine in terms of which direction we're looking for price action to go towards, because no Kraken correlation was offered here and no Kraken correlation was offered here. So simply price is stalling. Price is simply just waiting for a certain time for a move to unravel, which is what we end up seeing being our 9:30 opening. So we have that 9:30 opening delivering straight towards buy side, And like I mentioned at the start of the video, today we had high impact news at 10 a.m. and this is where you have your 10 a.m. candle delivering into this BISI, and that would be your 10 a.m. power of 3. So you have that engagement with a 15-minute BISI, 10 a.m. power of 3 to continue that deliverance up towards the buy side and engage with the underlying objective being these equal highs right here, which reside in a premium of the previous week's range, which is very clean, to be quite honest. Equal highs residing in a premium of your previous week's range. And then the standard deviation that I did have projected out in price would be from this low all the way up to this high. And this standard deviation was only confirmed to me once the 9:30 opening once the 9:30 candle had closed. So we see this massively bullish candle, but what we end up taking a notice to is you have a series of down close candles and a series of up close candles. This is a valid change in stay in delivery. You have the engagement with sell side right here, and this is the formation of your order block, which we don't actually end up returning back into, not needed, but standard deviation anchored to this leg to project for buy side. And then you have your -2, -2.5 projecting for the equilibrium of the previous week's range, as well as these equal highs in the crosshairs of that standard deviation. So taking a look at the executions that I did take today. So you have 9:30 opening right here, and 9:30 does present a cracking correlation with these lows right here. 5-second point of inception. I'm not getting on side with it. There is news ahead of time. I'm still unsure as to what price is going to do. Cracking correlation right here, deliverance up towards buy side. And like I'd mentioned, even if you were to say, okay, I'm going to look to align myself with the buy side delivery based off the premise of the hour one, cracking correlation at sell side, BISI right here in the discount of this range and the monthly opening. Rather hard to get on side with this buy side delivery unless you manage to put yourself in here, because 9:30 opens, instant delivery up towards buy side. Of course, you do have that nice TLP here as well, but besides that, instant delivery towards buy side, first presentation not even returned back into, and then we end up just continuing delivering up towards buy side. Price action distorts just under the Asia low, and this is ahead of our 10 a.m. candle. 10 a.m. was important today because we had high impact news, and we end up seeing 10 a.m. delivering straight down towards sell side, being that manipulation for the 10 a.m. power of 3. There was no reasoning for us to then look to dig down deeper, as we know that this delivered down into a 15-minute PD array, being that 15-minute BISI, and then we end up having a change in stay in delivery. So the 10 a.m. opening is your change in stay in delivery. So projected out in price, that is your change in stay in delivery. We end up seeing it being tagged here once, continue up to engage with Asia, continue up to engage with the previous day equilibrium, and then we have the return back down towards sell side. I do also have a standard deviation anchored out here. This would be a 15-second standard deviation, and we end up seeing that the point of terminus is projecting for the equilibrium of the previous day's range, and we end up seeing price cracking correlation presented, deliverance down towards sell side in a rather high resistance manner, and then we have another deliverance up towards buy side presenting us with another cracking correlation. And this is where the first execution was taken. So it was based on the 15-second. So if we drop down, scroll all the way back, so you have that deliverance up towards the buy side, cracking correlation with this high, and the cracking correlation is being presented in a premium of the previous day's range. And then you have a change in stay in delivery, series of up close candles, series of down close candles, and you also have imbalances here left in price here as well. And I simply just executed off of the change in stay in delivery. So off of this series of up close candles, once price returned back into it, that is when I was in the trade. It was a limit order. I wasn't bothered to look to market execute because, yeah, just limit order. Price ends up tagging me in, and what I was taking a notice of would be, for one, we have the standard deviation from this high all the way down to this low. You have your -2, -2.5, -4, -4.5, and that is the reason why I have that BISI on the M1 projected out in time, because this BISI was in a discount of this given range. So from this low all the way up to this high, you have your equilibrium being right here, and then you have everything under it being a discount. this BISI right here, I would have wanted to see it be inversed. That did not occur. We don't end up seeing this BISI being inversed. We don't see closure down below it for us to utilize it as resistance to continue down that sell side delivery motion. Instead, what we end up seeing is this candle closes right inside of it, and then we end up having the next candle deliver down into this BISI, which resides in a discount and had not been used, as well as it aligning with the OTE of this range. And then this serves as a point of inception for buy side delivery. Now, the only reason why I did not collapse this trade ultimately when price action was beginning to turn around was because there was no point of inception. There wasn't anything indicating for me to collapse the trade. The only thing that was indicated to me was manage the trade. So initially my stop loss was at this high. It was then later trailed down to the order block right here. So these series of up close candles, my stop loss was placed basically in alignment of the equilibrium of the previous day's range. And that is where my stop ended up staying at. And we have this engagement. I'm monitoring price action. The first thing I'm looking to see is, are we going to end up, are we going to end up getting rid of this? Are we going to end up inversing this SIBI right here? If we do, it's fine because there is a devil's mark above it, and just above it there's a SIBI, and also there is an order block right here because we see these series of up close candles engaging with the rejection block right here, as well as delivering above the equilibrium of the previous day's range. We know that the phase of we know that the PD array accompanied with the equilibrium would be an order block. So you have this order block right here. I'm looking for it to be utilized in an efficient manner. So I'm monitoring price action. We have the inversion of this. I'm looking to see, okay, we make a BISI. Can that get inversed as well? And well, it does not. We've also failed to inverse this BISI here. The same signature that we had seen just right here being the failure to displace down below it. We closed just inside of it, maintaining the premise of this delivering up towards buy side, and then we end up having that deliverance which took me out of the trade just at the equilibrium. Of course I could have moved my stop to this high, but ultimately I low-key just left it. I just said it's game. Risk was already reduced, and yeah, I low-key just left it. I was okay with being taken out of the trade. I wanted to allow for the trade to get played out and give it space to breed in order to see in order for it to do what I wanted to see it do. So yeah, you have that failure to continue down towards sell side. And in relation to what I was targeting during this trade was the data low. So I was looking to target the data low because we had high impact news at 10 immediately delivers down towards sell side. No, and we don't actually have any of the other assets engaging with the data low, as well as there was a devil's mark right here. So it looked like a rather nice target to look to engage with, and standard deviation was projecting for just above the data lows right here. And at this point, I don't really see anything to do. I revert back to the original plan of action going into the day, which was to look for the previous day high, which is the equal highs that reside right here. So looking for the previous day high to be engaged with so that I can find a point of inception for price action to then deliver down towards sell side. Now, I ended up taking a second execution before the initial plan of action ended up unraveling out. Now, this execution, I did end up closing myself because for one, it didn't align with the initial plan of action, and then for two, it wasn't showing me the signatures that I wanted to see, and then for three, it was time. So we have this move all the way up towards buy side, standard deviation projected out in price, and you have your -4, -4.5 projecting for a point of terminus, and then we're seeing signatures present themselves. So cracking correlation presented, and in the execution video I actually had a limit. So I had a limit at the order block right here, and I ended up canceling the limit. Reason why being is because I did not like the fact that we had the new hourly candle open, but there wasn't a sufficient high being formed just above it. I did not like the way price action was looking overall, and what I did not like about it was the M5. So if we're to slide over charts, take a look at the M5. Yeah, right here. So you have the cracking correlation. You have the cracking correlation that presented itself right here. And what I'd want to see would be a change in sustained delivery, but it wasn't looking as if price action was willing to deliver that, as well as the fact that not only am I looking for a change in sustained delivery to occur, but you have to also project out in time and price what you're looking to occur. And this is what led me to end up closing the trade, because not only did it not align with my initial plan of action, and that is very important, the non-alignment of the initial plan of action, it's very easy to slip into the mist of chaos without a plan of action. So in relation to the execution, what I end up taking a notice of is we have this change in sustained delivery. I canceled my limit, but we return back up into it, and we present another cracking correlation. And then the next thing that I'm looking to see would be, okay, do we have the inversion of this M1 BISI right here, which we do, and that is when I enter the trade. So I enter the trade being right here, and now I'm simply just looking for price action to deliver down towards sell side. So I was simply just looking to target this BISI right here. Now, of course, I could have said to myself, yes, I'm going to look to target the data lows, being the original point, being the original drawn liquidity for this trade right here. But this was a low resistance liquidity move. This was a low resistance liquidity move. So we don't even see any down close candles during the course of this move up towards the buy side. It's more than likely going to be a high resistance liquidity run. There is not enough basis for us to say that we can look for it to be a low resistance liquidity run, because there is no institutional order flow sponsorship in order for us to look for that. And that is what we ended up seeing right here. We seen institutional order flow sponsorship occur, enabling for a low resistance liquidity run down towards sell side, because this move here as well is rather low resistance, but we end up having that consolidation just ahead of price action engaging with the previous day high. I'm not sure if I touched on everything that was right here. Kind of went a little off topics. So yeah, manually ended up closing this trade with the acknowledgement that, okay, we are in the lunch hour. Consolidation is going to occur. We've just had this expansion just previously. Before, if we are going to deliver down towards sell side, it's going to be a high resistance liquidity move. And that is what we end up seeing during the lunch hour. So lunch, you have that nice consolidation, engineering of buy side right here, as well as the engineering of sell side that occurred right here, because sell side occurring here, you have unfilled BISIs on the higher time frames residing here as well. So once we end up seeing lunch ending, we then have that deliverance down towards sell side, and this is the high resistance liquidity move I would have looked to see if I was to stay in this short position right here, and it ends up occurring here. This is high resistance. Price is not eager to go anywhere. Gaps are not being respected, gaps are not being left opened, as well as gaps aren't even being made. So in terms of sell side delivery, the sell side imbalances aren't being printed. They aren't being printed, and then we end up having the engagement with the New York lunch low, and that is where you have your terminus. So you have your -4, -4.5, and that is where terminus is for a new market maker buy model to then ensue for price action to deliver all the way up towards buy side, engaging with the previous day high, which is also your hour 4 SIBI low. But what I also took a notice to is the fact that price action failed to deliver into an equilibrium of this range. So from this low all the way up to this high, price failed to engage with the equilibrium of this range. So projecting it out in time, we have failure to engage, and then we have that buy side delivery. To me, this is the engineering of sell side. That is simply the only way I view it. Price action is engineering sell side for a later point in time, and that later point in time was during the power hour session. So we have that deliverance all the way up towards buy side, and this is the scenario in which we end up seeing the standard deviation being projected from left to right instead of from right to left, because we have this cracking correlation right here under the 1400 opening. So our new hour 4 candle is opened, cracking correlation presented itself, and it's also in the region of our -4, -4.5, which we know to be terminus. But the standard deviation that you'd normally anchor would be from right to left, but this isn't a swing low. This is your swing low, but this isn't your swing low, and then this is your swing high. So if we are well and truly going to deliver up towards buy side, there needs to be a standard deviation to project. There's always going to be a standard deviation to project. In this case, it was from left to right, and we end up seeing -2, -2.5 reaccumulation of orders, which occurs right here. You have the that is simply just the reaccumulation of orders, not offset reaccumulation of orders. And then you have your terminus being the -4, -4.5, the New York lunch high, and that's where we end up seeing consolidation occurring at once the New York lunch high is engaged with. But this isn't just solely consolidation, this is time distortion. Price is actually waiting for a certain time. So we have the previous day high, equal highs on the hour 4 SIBI low, and we end up engaging with the New York lunch high. Time is to be taken a note of here. So the time window I am looking to engage with price would be 2:45 until 3:15. In this case, it's until market close because power hour is an algorithmic hour. So it's technically the entire hour is a macro. But if you're looking to refine it, yes, it would be from 2:45 all the way up until 3:15. So we're approaching the previous day high, except the only problem is we're approaching it ahead of time. And this isn't a problem in terms of price action can do this. We can end up serving the point of inception ahead of time, and we utilize the macros for expansion, or the reversal can end up happening on time, or it can end up happening a little after the time we are looking for. In this scenario, I'm observing price action. We're coming up close to the previous day high, and we form relatively equal highs with the previous day high. We fail to engage with it. I like to see this. We fail to engage with it, and then we deliver back down towards sell side. This is tripping retail into believing that this is resistance, sell side delivery is going to occur. That is simply not the case. And we end up rolling back over once the time is right. So we have our 45 candle right here, and we end up rolling back over all the way up towards buy side, engaging with this high, which left relatively equal highs with the previous day high, forming a cracking correlation with the previous day high and this high that resides right here. And then the next thing I'm simply observing is this BISI. I want to see it be inversed so that I can utilize it as a inversion, or a change in stay in delivery, which would have occurred right here, which I was open to as well. I would have been very much open to seeing price action roll over, change in stay in delivery occurring right here, and then executing off of that. But that is not what we end up seeing. What we end up seeing is price action being very stagnant. Again, we're seeing the distortion of price this time. So not the distortion of time, but the distortion of price, because it is time. The time is correct, but now we're seeing price being distorted in terms of we're paying attention to what price is doing in here. It's doing nothing. That's quite literally it. It's doing absolutely nothing. And the way I view the distortion of price is simply just like a charge up. It's like the charging up of a bar. Imagine like, a power bar, and it's simply just being charged up to the max in order to just explode. And that is the low resistance liquidity run that you see right here. That is the explosion after the bar has fully been charged up. So cracking correlation right here, and then the failure to present an inversion of this BISI right here. And then you have another cracking correlation presented. So with the failure to inverse this BISI, price action returns all the way up, price action delivers towards buy side, cracking correlation presented, and then this 1453 candle presents the inversion that we're looking for, as well as the order blocks. And we see the utilization of that order block very cleanly, no closure above it or inside of it at all. And then it's permitted for price action to deliver down towards sell side. The next thing that I was monitoring was this SIBI right here, because this SIBI was inversed, it was never utilized. And that is what we end up seeing right here. We have this 1457 candle spike down instantaneously into it and return all the way back up. Not the best of signs, to be quite honest. And the reason why this wasn't the best of signs was because, take a note of the time, 1457, roll on to the M5. When I was observing this price action, you have the cracking correlation right here, swing high, swing low. Everything is perfect in terms of the structure. The structure is quite literally perfect. It's as good as it can get, especially the fact that the structure is being presented to us on the M5. 1457 was the time to take a note of, so that would mean it was during this M5 candle right here, 1455. What I wanted to see occur is the change in state of delivery during that 1455 candle on the M5 interval. Did not happen. we fail to displace, and then we end up having the 1500 candle being our power hour also fail to do that as well. And these were not the best of signs, because for one, the 1500 candle did not form a high. It didn't form a high, and it simply just opened, formed a high, then delivered down. But it did not form a high in terms of the hour one candle, because there was nothing engaged with. There was no buy side engaged with. There was no PD array engaged with. None of that, none of the sorts occurred. And the reason why I was placing emphasis on the 1455 candle being the candle to change the stay in delivery for us is because then your 1500 candle opens, and in relation to the time frame alignment, your hour one aligning with your M5, you'd have the 1500 candle able to form a tie off of the M5 PD array being the change in stay in delivery, as well as the breaker block that resides right here. So this ultimately always isn't necessary. If there is an underlying premise, if there's an underlying motive, if there's an underlying objective that is going to occur, it will play out. But there is a clean manner in the way things play out, in terms of yes, this is very clean, this is, beautiful in a sense, or whatever. A lot of yap going on during this, I'm pretty sure, probably because there's the re-executions. But wrapping it up right here. So you have the 1500 candle opening right here, deliverance down towards sell side, engagement with this low, failure to displace down below it, and then return back up into buy side. And what ends up occurring here is we end up engaging with this SIBI, with this BISI right here. So we end up engaging with this BISI, and then we also form a cracking correlation right here. This is a swing high. ES fails to engage with this high, NASDAQ engages with it, and then you have this heavy deliverance down towards sell side. The bar was ultimately already charged up, and the reason why we're seeing such heavy deliverance here is because price was sponsored from an institutional reference point. Anything higher time frame is referred to as institutional. So institutional sponsorship occurred here at the previous day high, because we know that the previous day high is the set of relatively equal highs visible on the hour 4 and on the hour 1 and on the M15 X, Y, and Z. Institutional sponsorship occurs here, and we end up, after the distortion of price, charging up the bar for price action to then deliver down towards sell side. Cracking correlation presented itself here, change in stay in delivery, and I didn't even mark this out, but can mark it out. Swing high all the way down to swing low, and you have your point of terminus being right here. Now, where I was looking to take out my trade was not actually this low, it was just under it being this equilibrium right here, because I did not forget that this equilibrium was not engaged with, and yeah, that's really just about it. As well as the fact that there was this BISI here that I was paying attention to. This standard deviation is an M5 standard deviation, so taking a look at this chart right here being the M5 chart, before the change in stay in delivery is already confirmed, if I'm seeing this swing high and the swing low and I have an idea in mind, I'm already projecting this standard deviation in order to see if the measurements are aligning with what I already have in mind. But yeah, you have that's really basically just about it, to be quite honest. Low resistance, liquidity run down towards sell side, engagement with the equilibrium of this range. So not of the previous day's range, but of this range that resides right here. And then you end up having that buy side delivery motion in a rather high resistance fashion. Why? Because we've seen a low resistance move down towards sell side, and then the day ultimately just fizzles out. And yeah, that was basically just about it for the trade. The last thing that to add on top of it would be 1400 power of 3. So you have your hour 4 candle opening right here, and you have the cracking correlation that is presented with ES or YM. Honestly, I cannot remember, to be quite honest, but cracking correlation is here because it is annotated here. And there's no price action under the 1400 candle. The 1400 candle doesn't form a sufficient low in relation to the time frame alignment. It simply just delivers all the way up towards buy side, engaging with a higher time frame PD array. What I'm looking to see is the 1400 candle be traded under again. And that is what ends up occurring during this low resistance move down towards sell side. We end up having 1400 candle being engaged with, and we end up seeing sensitive price action around it. So 1, 2, 3, 4 candles failing to displace below it. It's not out of the ordinary. And that's really just about it for the executions today, being 3 executions. The last thing to add on would be why I was looking to execute on the M&Q contract instead of the NQ contract. And I think I mentioned it at the start of the video, simply just traders' discretion. So over the weekend, there was incidents occurring with Iran, bombings, X, Y, and Z. And the thing is that this occurred over the weekend, and this permits for large opening range gaps going into the week. So a new week opening gap is bound to occur. If you were to take a look at the price action from last year, around this time, there was a segment, well, we can really just look at it, to be quite honest. Straying very much off track here. So during Q1 right here, we end up seeing the exact same thing occurring as well. So during Q1 right here, during last year's price action, we end up seeing the exact same thing occurring as well. But if I am to simply just go here and take a look at the hour 4, because it was very visible on the hour 4, this was the price action that we were presented with. You have these opening gaps, and this is what I was referring to being this new week opening gap. Over the weekend, if you were to go and look at the news that occurred during 2025 January, over this weekend, honestly, I could not tell you. It's something to do with Trump. I quite frankly could not care less, because I don't care about the fundamentals that go on in the world that affect price, because the thing is that it's all simply just a smokescreen. That's all it is. It's a smokescreen. It's a distraction. What is going on in price is going to go on whether or not news occurs. Such events are simply just a catalyst. That is the perfect word to use in this circumstance. It's simply just a catalyst in order to, for one, create a sentiment, for two, shift the narrative, and to be honest, the list can quite literally go on. The only thing that is needed to be taken a note of is the fact that there are simply just smoke screens and catalysts. So this is what I was referring to in terms of news occurring and new week opening gaps. So basically, as to why I was on the M&Q. So over the weekend, news occurring about bombings, X, Y, and Z. This is occurring over the weekend. And when these type of events happen during the weekend, going into the week, we're going to see very volatile price action right off of the open in terms of new week opening gaps when it comes to the futures contracts. And then if you were to be taking a look at the other, assets. So if we're taking a look at this, you have gold GPP. There is no price action delivering down towards sell side. This means that we opened, immediately delivered up towards buy side. Likewise with gold, euro as well. And then when you look at the euro USD, we end up having this gap open, immediate deliverance down towards sell side. So the trader's discretion comes in terms of acknowledging that, okay, price action is going to be more volatile than usual in terms of the ranges we're seeing, in terms of what price is asking of us in terms of stop loss placements. Because when it comes to my trading and the risk element of trading, it's very discretionary in terms of what price is requiring of me. So I don't have a fixed risk to reward. I don't even pay attention to risk to reward. I don't believe in risk to reward, other than, of course, negative risk to rewards make no sense. If it's one-to-ones it is, but besides that, I don't care for risk to rewards. I don't pay attention to risk to rewards. I simply just do what price is asking me to do. So if my stop loss is required to be 25 points, then it is going to be 25 points. If it's required to be 60 points, then it's going to be 60 points in order to be aligned with the algorithm, in order to simply be aligned with the algorithm. The only problem is that if my stop loss is shifting from 10 points, 5 points to 30 points, all the way up to 50 points one day, I cannot be using the exact same amount of risk every time, because I'm opening myself up to I don't even think I have to explain that. I'm opening myself up to a lot of risk because I'm not always going to be correct in a trade idea I decide to execute on. So the way to navigate around this is acknowledging one's risk tolerance. Everyone has a risk tolerance, and it's something that should be defined very early on during developing stages. I am waffling, yapping, going way off track, but risk tolerances should be defined, and yeah, they should be established very on during a trader's developing stage, because not everyone has the stomach to be able to risk 500 on a single trade, or 1,000 on a single trade, or 2,000 or 3,000 or 5,000. And if the risk tolerance of the operator is not respected, it's not adhered to, it's not acknowledged, it leads to the management of trades very, very ineffectively. You will be in a trade that you are risking too much on and you are not comfortable risking. The key word here is comfortable. You need to be comfortable with what you have put on the table. The best way to look at it is whatever you put on the table, consider it gone instantaneously. Win or lose, it's gone. End of story. So if one is not comfortable with the risk they have put on the table, it ultimately leads, without a doubt, the ineffective management of the trade. The ineffective management of a trade looks like moving to break even early, or closing the trade early and not submitting to the idea, or price staying around entry for too long and closing the trade because all of a sudden you don't trust the idea. But you don't trust the idea because price isn't showing it to you. You don't trust the idea because the amount of leverage on the table is not comfortable with you. There is a lot of ways the trade can be ineffectively managed simply just because the risk tolerance is above the threshold of the operator. So yeah, going into the day, it's simply just executing on the M&Q is simply just trader's discretion. But today wasn't all that bad. In terms of all the positions I executed on, yeah, in terms of all the positions I executed on, this was the largest stop loss. So 25 points, that's not that bad. 20 points, also not that bad. Could have well and truly executed them with the, could have well and truly executed these positions on the NQ contract, but I had already gone into the day with the idea that I'm going to execute on the M&Q. So with the acknowledgement of the loss on this trade, and then this trade which did not align with the initial plan of action, and I manually ended up closing it, I ultimately simply just decided to stay on the M&Q contract, even though I could have executed this position on the NQ contract, because I was ultimately break even on the day. This loss was minimized to around 7 points, and this was taken out in a small bit of profit, so it was break even on the day. And this was the lowest risk out of everything. But the moral of the story is simply just stick to the plan. It's really just stick to the plan. That's really just quite literally it.